Forget everything you think you know about taxes. The U.S. tax court isn't just some stuffy, boring courtroom filled with accountants. Oh no, it's a real-life theater where fortunes are won and lost, and where some of the most creative and, yes, sometimes criminal financial stories get told. So let's pull back the curtain on some of the wildest cases where regular people and big-shot companies went head-to-head with the IRS. I mean, it's the ultimate question, right? What happens when you push the envelope a little too far? Well, we're going to peek into the confidential files of folks who thought they had the perfect plan to slash their tax bill. Some of these plans were, frankly, kind of clumsy. Others were incredibly complex. But you know what? They all ended up in the same place, right under the tax court's microscope. All right, first up, let's start with the basics. We're talking about some pretty daring deductions and some completely fictitious claims. These are the cases of people trying to deduct expenses for things that just never happened. And as you'll see, sometimes the simplest lie is the easiest one to unravel. So, picture this. A taxpayer claims a business expense for over $14,000 for databases, and they've got the paperwork to prove it. An invoice, a credit card statement. I mean, on the surface, it looks legit, right? Well, not so fast. The whole thing came crashing down with one super simple check from the IRS. It turns out the petitioner didn't even have a Discover account ending in that number. The court was pretty blunt about it, finding the charge was straight up fraudulent. Boom! Case closed. And this kind of thing just keeps happening. Here's another one. A taxpayer claiming thousands of bucks in vehicle expenses for these epic cross-country business trips. The only problem? The hotel receipts they submitted for conferences in Chicago and New Orleans were totally fake. The court basically said your business isn't even big enough to need these trips. The whole alibi was just a work of fiction. Okay, so fake receipts are one thing, but things get way messier when you throw family into the mix. Now we're talking about fraud clashing with family feuds. This is where tax disputes aren't just about the numbers anymore. They're all tangled up in personal relationships, conflicting stories, and some seriously complicated schemes. So check out the flow of cash in this family's jewelry business. It's like a shell game. The money from sales doesn't go straight into the business account. No, it takes this crazy roundabout path through a personal account the brothers owned, then into a real estate company, and then it finally lands back in the business accounts, often disguised as a loan to hide where it really came from. So their cover story was, oh, we were just selling some gift jewelry for our dad. But as soon as they got questioned under oath, the whole thing just crumbled. One brother testified the price tags were already on the jewelry when they got it. The other brother said, nope, we put them on later. And their dad? He testified he never even saw a dime from any sales. The court, as you can imagine, found the whole story completely implausible. And it didn't stop there. The court also discovered that one of the brothers was living in a house owned by the family partnership, completely rent-free. Well, the IRS has a name for that. Unreported income, and it was to the tune of $48,000 a year. That's not a small chunk of change. All right, let's leave the family drama behind and step into the big leagues. We're talking big money and even bigger schemes. This is the world of hedge funds, where they use some mind-bending financial engineering to try and make massive tax liabilities just vanish into thin air. Now, at the heart of all of these super complex cases is a really simple idea. It's a legal doctrine called economic substance. And what it means is this. Any deal you make has to have a real economic point to it other than just saving money on taxes. You can't just build some crazy, complicated structure if its only purpose is to dodge the IRS. Which brings us to a hedge fund called GWA. They set up these elaborate contracts with Deutsche Bank and called them options. But here's the thing. They were options in name only. See, with a real option, the seller takes on actual risk. In this case, the bank had basically zero risk. And the premium the fund paid, it wasn't a real premium. It was just collateral that they got 100% of back. The court looked at all this and said, no, you guys effectively own these assets the whole time. So why go through all this trouble? What was the point of this whole complicated financial dance? Well, the goal was actually pretty simple and pretty audacious. They were trying to pull off some financial alchemy. They wanted to take their short-term trading profits, which get taxed at a really high rate, and magically convert them into long-term capital gains, which, you guessed it, are taxed at a much, much lower rate. The court saw right through the magic trick and ruled the whole scheme lacked economic substance. Okay, for our final story, we're shifting gears again.
This one isn't about hiding income or fake transactions. It's about something way more subjective. How much is a masterpiece really worth, especially when a massive charitable deduction is on the line?
So, a donor gifts this incredible, ancient Chinese painting to the Met. And get this, for insurance purposes, one of the museum's own curators values it at a jaw-dropping $50 million. Now, of course, when you donate something that valuable, you can get a huge tax deduction. To justify the high value, the donor's appraiser points to what they call a comparable sale, another painting that supposedly sold at auction for over 25 million bucks. But not so fast. The IRS brings in their own expert, and this is where the battle of the appraisals really begins. The expert points out two huge problems. First, that record-setting $25 million price. Yeah, it was never actually paid in full. Whoops. And maybe even more importantly, that comparable painting had this incredible, documented history, its provenance, with 26 imperial seals. The donated painting's history? Pretty murky. The comparison just didn't hold up. So, from fraudulent invoices and family conspiracies to intricate financial schemes and battles over priceless art, the tax court really does see it all. These cases show just how razor-thin and often blurry that line is between savvy tax planning and outright fraud.
It really makes you wonder, doesn't it?
Where exactly is that line, and how far is too far?